I would look also at secondary properties within capital cities. So I think there's tremendous opportunity in secondary retail in Warsaw, for instance, that the barriers to entry into that market are so substantial, even though there are planned additional shopping centers. The liquidity is extremely high and the occupier demand is undeniable. So I think there's great opportunity even in some of the older assets to be doing a value add play within the retail sector primarily.
So these are typically smaller centres rather than...
Not at all. If you look at the Valad announcement of the GE portfolio, that portfolio is really full of potential. Absolutely great locations that are in fact irreplaceable. You need to have very large sites to be able to develop retail in Warsaw of any meaning. So, and the sites are gone. So there's very little opportunity now. So one has to take older retail, reposition it, and create world-class centers. And that's a great opportunity.
But you also have to say, I mean, especially in Valad centers and also in some other older centers, I think that the retail is slightly changing. Because Daniel just mentioned before, Carrefour, they lease 20,000 square meters. In the meantime, they reduce it to 8 to 10,000 square meters. So especially in the older centers, you have oversized hypermarkets. And in addition to that, for example, the Metro Group with its Real brand is also withdrawn from the Polish market, which is sad to be, let's say, overtaken by Auchan. Here, I do not know whether there's already a decision made by the Anti-Monopoly Commission, but the retail, how should I say, the retail, the shape of the retail of the hypermarket, supermarket, this is also changing at the moment. I think this is also challenging for the market. In some of the centers, you can certainly reduce from 20,000 to 8,000, and you find Intersport, you find some other new brands coming into the market, reoccupying the rest of the 12,000 square meters. So this is a very good idea, and it's a very good opportunity to let's say, configure the center and reshape it and replace it in the market. But there's also some threats linked to it, because you will have in the future, we probably have less, especially food anchor tenants.
Yeah, but that's very typical of, if you look around Western Europe, and we invest across Europe, hypermarket is not the key anchor in shopping centres in the UK, it's department stores. So therefore, retail is an evolving business. I think where people make a mistake with retail is they buy a shopping centre that's absolutely perfect today, and then they do nothing, and then 10 years later, great, oh my God, it's not as perfect as it was 10 years ago. What's happened? Well, offices is very simple. You buy an office in a great location, and it stays there, and it stays a great location. You may move the tenants around, and things may happen, but it's always going to be a good office. A retail centre, the location is good, but you have to continually update the tenant mix, because new tenants are coming in. What's exciting about Poland is that it's happening very quickly and very rapidly. You're seeing lots of new tenants come in. Of course, they always go to Warsaw first, but then they go to the best centre. What does that do? That pushes some of the tenants that are in there into the second and third centres. And then they start going into the other cities, the major cities. So what you find is that retail is evolving. So I think that the opportunity that Neil says is very real. I mean, it's not just an opportunity in Poland, in secondary cities, it's an opportunity throughout Europe. And re-emerging retail, I mean, if you buy shopping centres in a good location, anywhere in Europe, you can do very well with them, as long as you're prepared to invest.
And to manage it.
Yeah, absolutely. If you buy a shopping and just do nothing, it's not going to be a good shopping.